Tuesday, with soybeans posting a fifth day of losses as planting progress continues in the U.S. at a record pace. AgDay's Michelle Rook joins us with the latest in markets now.
A mostly lower day in the grains on Tuesday. Oliver Sloup with Blue Line Futures is joining us with analysis. And Oliver, soybeans seeing some pretty good fund selling pressure again on Tuesday. Talk about what precipitated it and how much more selling you think we'll see.
Well, I think a large part of the pressure that we've seen here over, really the last week has just kind of been a risk-off trade, not just in the soybean market, but a lot of the markets, even outside of the grain space. You see the outside market starting to roll over a bit. You've got crude oil rolling over quite a bit as well. And so it's definitely a risk-off trade. And I think a lot of that might revolve around potential slowing economy. But looking a little bit more domestically here, we've gotten pretty good weather in the United States. We are ahead of the 5-year average as far as planting progress goes. So we are in good shape. Now, there are going to be problem areas. There are every single year. There's a story of the have and have-nots, and that's expected to play out this year as well. But what we really need to see to help support this market is some demand. Seasonally, this isn't the time of year where we really see that thrive. But I think eventually low prices will cure low prices. $14 is going to be an interesting level to watch for that July contract. See if that can't spur any demand.
And the funds keep pushing the wheat, even though they're so short in Chicago wheat. And is there any fundamental reason behind that?
Well, there's been fundamental reason for this market to rally, in my opinion. Looking at the weather in Kansas, looking at the potential for disruptions in the Black Sea, I think would be reason enough, or at least to halt the selling. And then you've got funds, as you had mentioned, just really pressing the pedal to the metal. They're short about 102,000 contracts, which is their largest net short position in over 5 years. So all it would take is one bad event, and it's a rush to the exits and a thinner market than what you see in corn and soybeans.
So corn actually bounced off of support, but is it going to hold, do you think?
I think July corn will be able to hold. 595 to 601 is the pocket. We tested 601 to a T. 595 is the gap going back to July 26th. A break and close below there, that would probably neutralize my bias. But down here on the first test, I think it represents a very good risk-reward opportunity to the buy side, and we can at least retrace some of the losses that we've seen over the last week.
All right, great analysis. Thanks for joining us, Oliver Sloup, Blue Line Futures. Full analysis at our Markets Now podcast. More Ag Day is coming up.